Okay, so let's get straight into it. There's a big shift happening in the market very, very soon. And every time there's a big shift, there's two sides of the coin. There's people that lose a ton of money, and then there's people who make their fortunes off that shift. Now, it's coiling up across the markets. And how do I know this? Is because on my watch list, I watch a bunch of different assets that give an idea of total market conditions for the most part. I'm not going to go over every single asset that I watch. That would make the video super long. But the main ones that I'm watching right now to take advantage of this sort of reversal incoming is a few, just a few, like three or four. So the first one's going to be BTC, which we're looking at right now, gold, and then a stock ticker, which is NNE, that's in the energy sector. And then I also have just Tesla, because, I mean, there's just such good moves. Tesla moves a little bit differently than the rest of the stocks. It's kind of in its own lane, which I like, because you don't have to worry about too many different correlations, and just you trade it based off the price action. But getting straight into it, let's start with BTC. I've made several videos about this in the past on specifically macro BTC price action in the 4-year cycle, and then the micro cycles that happen within each 4-year cycle. So I won't go over all of that, but I'll give just a general kind of overview of it that won't take too long. I know this looks like insane. This is a part of just like a separate kind of fractal strategy that I just give myself a visual representation of what's repeating itself. But basically, starting with the macro, there's this section of price action that's been repeating itself for the past 5-6 months now, and I've been following it very carefully. So what I'm going to do is put current price action on the right side of the screen, and then I'll put the fractal, which is kind of like a bar pattern, you could think of it like that, on the left side of the screen. So right here, specifically this, altogether, it's this entire range, but specifically where we're at right now is this section right here. And I'm going to break down why and how to take advantage of that. First, I have it actually mapped out on the index version of the chart, I believe. So let me just pull that up. Yep, perfect. So what is repeating what? Whoops, come on. Why is it not letting me? Okay, whatever. This entire range that you see right here with the current price action, the recent price action, all of this is all of this. And you're probably thinking, well, not really. It doesn't even look exactly the same. But the general movements, the overall pattern, not every single candle, not every single micro bit of price action. That's not what I'm saying. So what you can do to increase your win rate and your overall strategy probability is to know the overall direction of something. So if you know back over here that, hey, every 400 days after a cycle peak happens, we tend to bottom out on Bitcoin. With that knowledge, you don't know exactly what's going to happen right here in this micro price action, but you know, hey, we're near a bottom. I should be waiting for bottoms. I shouldn't, be trying to short every single move or hold shorts too long because, I'm waiting for a bigger move. So if you saw this peak and you see these equal highs right here, you might want to short thinking we're going to make a lower low because we're in a downtrend, right? That's what like a average retail perspective is. But knowing that we're in the 400-day cycle past the cycle peak right here, you would go, no, it's about to actually break out and continue up again. So with that being said, every 900 to 1,000 days, specifically like 1,050 days after a cycle peak, we have these little accumulation ranges that repeat themselves every single 4 years without exception. So if you want to look more into that, literally just go to my channel and watch the video that's titled How I Plan to Get Rich This BTC Bull Run. That one goes over everything. But the point is that 1,050 days, we have an accumulation range before the juicy portion of the bull run starts, where we're just heading up like 20% every day, just like those crazy days in the crypto market where everything's pumping. So we're reaching that portion of it, and every single one of these ranges has a pump, a dump, a consolidation, and then a continuation. Same thing here. We have the pump, a quick sharp dump, consolidation, and then the continuation of the overall market direction. So same thing right here. This is, let's see where we're at now. It's like 1,000, close. So it's literally 1,060, 1,070 days. So we're getting to that point now. And then just to show you, so you believe me, I'll just pull this from here to here. Right before it's about to break out, we're, see, 1,032 days, literally right here before the breakout starts. And you could do the same thing. You could test this out on your own. Go on TradingView and pull from the cycle peaks to about 1,030 to 1,050 days. Now that we know that we're repeating this section of the fractal on the chart, we could take advantage of that by specifically trying to get in on bottoms and taking breakouts without worrying so much that the breakout is actually a fake out. So right here, we had sort of like our pump, we had several dumps, and then we have a consolidation. Pretty much this whole area is a consolidation, but once we reach that point, we should be looking to break out. So I'm saying that the next breakout above like 74K is the breakout where we start going into price discovery. Now, I still think that where we're at right now with price action, how we broke above this trend line right here today, literally today we broke out. I still think this is one of the micro tops, and I'll explain why. Explain, I said, but right here, so this portion of the fractal, well, this is current price action, but this portion of the fractal is this. See this little blue circle here? Now, that other chart that I showed you with circles going crazy, and there's like 5 billion circles, that one, let me see if it's this one right here. Is it this one? Whatever, the chart with, yep, all the circles. So you can see when a range is forming, it's just a seed that's maturing over time. Now you can see a specific pattern repeating itself over and over, and then it gets longer and bigger and more volatile as it's happening. So for example, this, how we created this peak right here, and then we did like this inverse head and shoulders and then broke out to another peak. Look at this. We have our peak right here. We drop, we do a bigger inverse head and shoulders. So all of this price action right here is literally all of this price action right here. And then we break out, create a peak, drop, Same thing right here. It's a bigger version of it. Create a peak, a drop, a peak, a drop, and it's color coded. So the white circle is the white circle. This orange one right here connects to this one right here. So I haven't seen people draw these like ridiculous charts like I have, but it gives an idea. So right now, I attributed this entire range right here to specifically this range right here. So this range is this one, okay? That's how I knew, and I took this long, that this little downtrend that was forming right here was going to be broken above, and I had a trigger long waiting on the breakout of this trend line, so it just got me in as this pump happened. I didn't take advantage of the whole pump. I got out somewhere around here and took my profits, so it did go up a little bit higher. But the point is that literally, look at this. We form that peak, we drop, we push up, we draw it out for you, and then we do this little, like it pushes up, pulls back a little bit, and then a quick higher high, and then the drop happens, right? Same thing here. That slight pullback, like an H pattern, and then form that peak, and then that drop happens, right? So this peak would be this one right here. And then obviously it doesn't follow perfectly, but the point is we're near this bottom. So knowing that even though we broke below these lows, I'm not going to try to trade it down to like the next critical level, because I know that this is a fake out. Even though we broke this uptrend, all of this was just sell side liquidity inducement so that we can head back up. I don't do the whole ICT stuff with the sell sides, and I do use sell side and buy side liquidity inducement in my trades, but I don't take their whole like fair value gaps and all that stuff. I just prefer using the fractals and then using breakouts, normal TA, which confirms that the fractal is being validated. So when we came here, I attributed this high right here to this little consolidation high right here. That same trend line, see this blue trend line right here, being this blue trend line right here. So I knew that right here, we're going to break above it. So that's why I had that limit order weighting. The whole point of why I'm explaining this is to show some validation to the fractals and that they do repeat, not candle for candle, but that's where your own personal technical analysis comes in with breakouts and patterns, all that stuff. Typically the breakouts and patterns, retest resumptions, it's a low probability trading style. Everybody uses it and nobody's profitable for some reason, right? But when you look at a chart and you see a breakout happening, you're like, oh, well, that one followed. Those ones that end up following, in my experience, are the ones that are following these fractals. And the ones that don't follow, where we, like I just talked about, broke below that uptrend, but we didn't continue, even though we retest and resumed by breaking lower than that low. That's following the breakout retest resumption strategy. It didn't work out. But this one is going to work out. It retest, resumes, retests again, and then we actually resume. This one is working out because it's following the fractal. And the same thing is going to happen here, because this is following a previous fractal right here. It's following this one. I won't get into all that, but literally this was this. Okay, so it'll take too long to go over all that, but it's actually quite easy to understand. You probably already understood by me just pointing that out. But right here, this green section is this. So what am I expecting? I'm expecting a consolidation of form after we hit this high, which we already started doing today. And notice how it's very like, it's like a megaphone pattern where we do make a lower low than this little channel range, but it doesn't close, it ends up being a fake out. We head back up, breaking above these highs right here. But that also, even though we closed above these wicks, that also wasn't a breakout continuation, and it ends up dropping. Well, the same thing for us here. We're literally doing the same pattern. So I think that currently we're somewhere around here, and what I'm going to be waiting for is a very clear close below right here. So when we push up again, we close below here, I'm going to be looking to short with a DCA1, so dollar cost averaging like maybe a third of my position in right here. This is just how I go about my trades. And then as we push up again, which we probably will, just to form another range or even make a quick higher high, I'm not tripping because I'm only down 1/3 of what I typically would be. And I can just dollar cost average my second entry there. And then as it actually resumes down, I'll be fully DCA'd in, being in 100% of my position size. And then I'm going to be looking to short this and hold these shorts. Based off this fractal, we head all the way. It's a pretty big drop that comes in. Now, will it drop this exact same length? Probably not. But what I'm going to be waiting on is when we do drop and we actually do end up breaking below this low, and everybody thinks the bull market's starting right now, which we're very close, but not quite yet. We're going to break below this uptrend. This is what I think is going to happen. Obviously, none of this is financial advice. I have to say that. This is just my personal outlook on the market. So I'm not telling you to do anything. This is just my personal plan. Once we break below this uptrend right here, I will take that as a breakout. And we should continue down, and I have a couple different targets. So if it's just a minor drop before the bull market starts, which the overall fractal says it should be, because we're on this high right here. So it shows that we break below this uptrend. Right here. So it's a fake out, sell side liquidity inducement, but then we end up just breaking out anyway. So my idea of what's going to happen is we're going to consolidate here just for a second, not just a few days, nothing crazy. Once we have that break below, we might have a little quick retest or whatever, or a fake out before resuming. So I'm not going to get scared of that. I'll have my stops higher. I'm not saying this is exactly what's going to happen. It's just kind of like an idea. And then once we break below this trend line, I'm looking to be fully DCA'd in and hold it to my first critical zone, which is right here. These are based off my kind of arbitrary fib levels, but 55K. Am I looking to catch the knife by buying 55/56K? No, I'm not going to just buy in as soon as I see this price. I'm now watching it very closely, waiting for the price to either consolidate and then break above that consolidation, and then look to long there with a DCA1. Or if we just keep cutting through it like butter, that's why you don't want to try to catch the knife. However low we end up going, I'm not trying to predict the bottom or call a number on the bottom. I'm letting it go as low as it needs to go because these fractals don't give the length, they just give direction. I'm waiting for something to look similar to this, and it's clear that right here, after we end up breaking that downtrend where we came from, we do a quick little retest. We don't make a lower low or anything. We could over here, but I'm not going to get scared. I'd probably have stops below that swing low. And then as soon as I see like actual high volume, look at the volume. That's wild. Like after I see some high volume coming in and like a stronger breakout, I'm going to be fully DCA'd in. So if it ends up doing like this and we get that high volume push, people are going to be kind of, ooh, I didn't get the best entry right here, so I should probably just wait for a quick little pullback. When the bull market starts, there's not going to be a pullback. No, I'm not saying that in every situation, but you know what I mean. Like the pullback, it could go this high and then pull back and continue up, which literally looks like it's going to do that. Huge breakout, pull back to retest the overall highs of this range. So retesting around like 67K or whatever, and then continuing up. It'll be probably something like that. So after I see some high volume coming in, I'm not going to be like scared to enter as it's already kind of high and I didn't catch the bottom. I'm going to be thinking in my mind, okay, this is confirming and validating what the fractal is already saying, which is, hey, the bull market is starting. Especially since we're at that 1,050-day post-cycle top time zone, that just further affirms my assessment of the market direction. So that's the BTC setup. Looking to short here on a break below, like a micro consolidation. If it pushes up again, it does a quick, retest, buy side liquidity inducement BS going on, that's fine. I'll just dollar cost average again on a rejection of that high. And as it actually starts resuming down, and we get like a break below whatever consolidation low we formed, I'll just add to my position there with another 1/3 entry, making it 100%, which would probably be not on the resumption right here, but on the actual break of the trend line. I'd probably get out of my position right here. If it starts consolidating, I'll just get out. If it keeps going lower, that's fine. I'll just keep holding. But if it starts consolidating, I'm just going to get out and now be waiting for my long position to form. So that's BTC. That was already a lot. That was almost 20 minutes of going over BTC. But this one is very critical because we're talking about something that happens every 4 years only. So I just wanted to be, I want to explain it in a way where I'm covering all the details. So next is gold, which I already went in the last video. I already talked about this in the previous video, but we are also following a fractal from 2010 specifically. Go back, watch that video. I go over the whole gold setup. It's a 13,000 pip swing short setup. So we're following this price action right here. So I just do this so every time I change the time frame, it doesn't, go back to current price action, and then I have to scroll back 10 years worth of price action. So right here, I won't go over every single circle because I talked about a little bit of this in the previous videos, and I posted previous videos about all these reoccurring patterns. But right here is where we're at on the fractal. We have this downtrend form, and then it breaks above this downtrend right here, closes above all these wicks, even though they were wicks before. So it's clearly a bull trap here, buy side liquidity inducement. And then as soon as we break below, it looks cleaner on like the 3 hour and 2 hour, but as soon as we break below that, uptrend that we came from, boom, it's all down from there. And we go back down to this sort of breakout area, this red circle, our version of the red circle, which we end up pulling back to, was right here, the consolidation before the breakout. So red is red, orange is orange, yellow is yellow, you get the point. So on this breakdown right here would be entry 1, so I'm already in my gold short. And then as soon as it's resuming down, I'm going to actually DCA my other 2/3 position. See, I literally entered here, which people would be scared of. Oh, it's already going against me. Well, it's going against only 1/3 of what I typically trade with. So it's not like emotionally straining where I'm in drawdown and I'm like, oh shoot, you know, this is tough. I'm holding through a big loss right now. No, that's not how I play this. So I like to DCA in 1/3 of my positions at a time, most of the time. Sometimes if it's just like a scalp, of course, I'm not going to do 1/3 for a quick little 20-minute trade. So right here, we can clearly see that, let's say you pulled the trend line like this to the body. We see that we broke below it, and then as we break below it, we still have that top wick. See this top wick right here? So we form kind of like this micro downtrend, breaking below it before we actually start heading down, which is actually very similar to what we're doing here. Not even similar, it's like spot on. So we have this trend line forming right there, and then we break above it before we start heading down. So I'm calling that this is actually just a top right here, and the resumption down from this point with this little trend line here, as soon as it, you know, chills out for a second, it starts breaking below this blue trend line, I'm going to be looking to add in another DCA here, and then it breaks below this next. Boom, that's final DCA entry 3. So I'm fully sized in, average entry being around somewhere here. And then going all the way down to our red circle / critical fib zones, we will have, I'll show you real quick. So just taking it down to here, which the fractal shows we actually go below the red circle, or below that red line, all the way down. So if we follow fully the fractal, which you don't want to do that every time, but it's showing 14,000 pips, and I do have a very critical, see this green zone, it's a critical fib level zone that I made out of it, which is, you know, kind of confirming the red circle drop. But I'm probably going to DCA out 1/3 here, 2/3 here, and then the full position size 3/3 right here. So that's how I'm going to play it. So 14,000 pip drop, but with DCAing it, I'd probably only take like 10,000 pips or 11,000, which is freaking phenomenal. But yeah, so that's gold. So a big short incoming on gold, a big short coming in on Bitcoin before it starts pumping, which the fractal shows we actually start pumping on gold as well. And then after this point, it's literally, I ended the replay mode there, but it just keeps going up into a gold bull market. So the market shift that I'm talking about is a drop before a resumption begins, specifically for gold and Bitcoin. And I think I'll have to do more TA on like S&P 500 and Dow, but I think it's pretty much the same setup for S&P and Dow as well. So the final, I'll go over Tesla too, that one's very simple, but N and E is a very, very promising setup. So since it's a new stock, it's only been out for like since May. It IPO'd in May. There's not too much data to go off of, but that makes it easy to use fractals. Now this whole setup, it's quite simple. You have a pump, you have a consolidation, a dump, a consolidation, a pump, consolidation. Typically that would count as the dump. And then it just continues. It keeps doing this. But then what is this? It's not following this, but this is a bigger, matured version of all of these patterns playing out. So I'm literally saying that this price action right here, where it just dumps, is this, but a much bigger, matured version of it, because it's bigger, it's longer now, so it's going to take more time to play out, which, you know, it's going to be bigger percentage returns as well. That's technically not true because it's a smaller price here, but it's going to take more time and there's going to be way more candles involved. So it's like a smaller time frame. You could put this on like the 1 hour and then put the same chart on like the 4 hour next to it, and that small pattern will look like the big pattern. And if you're just not paying attention to the time frames, you'll think you're on the same time frame, but you're not, because the pattern is maturing but still repeating itself. So that's why bar patterns don't work every time, because people don't factor in that the seed is literally growing. But yeah, so let's get straight into it. This drop right here was this drop right here. We do a quick pump, and then we have like this little fake out here, which same thing right here, bigger version of it. So I'm attributing this low to this one. And then I was literally trading it thinking we're going to have another version of this happening, which we are, but it's just going to take way more time than this. So this happened in like, what, a month? So this is going to take, you know, a few months, maybe longer. I don't know. But the point is that after we pump up and we consolidate here, and I'm attributing this consolidation to this one, we have all of this price action coming in, which I believe would put us either at an all-time past this and going to an all-time high, or back up to the all-time high, which is 84%. So a really big move. Now, right now, I believe we are right here. If I put it on the smaller time frame, it looks much cleaner, easier to see. So I'll do the quick little circles. Where's my brush? So this low being this one, boom, boom, okay, pushes up. We have our first top here, this top being this one. We have bottom one right here, top two, bottom two, top three, which we kind of form this little portion right here. So there's two scenarios where we could technically be right here or right here, but either one still has us going up. So, you know, it's not like, is it going to go up or down? Now it's, is it going to go up or up? So regardless, you know, it's fine. That's the cool thing about fractals. Like, there's going to be plenty of times where you think you're in a specific spot. And, oh, am I here or am I here? I mean, they're both saying up, so I think you're good. But yeah, so this section right here on the breakout, so we push up after this spot right here, and we do on the smaller time frame, it's like a bull flag, or slash a consolidation. It fakes out that bull flag slash consolidation and then starts breaking out. And as soon as we break that high, which is these kind of highs right here, boom, it's all up from there. So our matured version of it is, instead of like a sideways consolidation, it's more of like that drop we came from, which is that drop is the bull flag. It's the start of the bull flag. And then this little drop right here was the fake out. Now people are saying, oh, this, you know, or technically this is a bear flag, but it broke below it. So retail is thinking, oh, bear flag, boom, it's a drop. There's a drop incoming. Broke below this trend line, it's all bearish from this point. But that's sell side liquidity inducement, so that when we break above this uptrend again, just like this, it's going to be all up from there. So that's the game plan. On the break above 18, I'll just say 19. On the break above 19 will be, oh, okay, XAU alert. So on the break above 19, that should be a DCA entry. So I'm already in NNE with 1/3 of my position. Now on the breakout here, I'm going to add another third, and on the horizontal resistance breakout, this version right here would be the final DCA entrance. So as the price action is proving my fractal more and more right, I'm adjusting my position size to it proving me right. You see what I'm saying? So they go hand in hand. Like, the more I'm proven right, the more I'm willing to risk on the trade, which makes perfect sense. So on the breakout above here, I believe there's going to be a big push up here. And I think we're going to head up to all-time highs and possibly even break above it. But just to break above here to the all-time high, that's already, you know, near 80%, which is, I'll take 80% all day. You know, it's a really nice setup. So this video is already super long. So I'm going to make a separate video for Tesla, but those are the main three. BTC, quick drop, not really too quick, but it's going to take some time to get down there, maybe a week, maybe two. And then a quick consolidation, that part should be quick, and then a breakout. And then on XAU, we're looking for a short play. So on the break below here, looking to take it all the way down to like 25, 28, but I'm going to do dollar cost averages out of my position. And then NNE, looking to long the breakout above 19 and 20. So yeah, those are the setups. Let me know what you guys think. And yeah, I'll make that video on Tesla tomorrow, or I'll make it today. I'll probably post it today or tomorrow. But yeah, let me know what you guys think.